We're going to talk about institutions and DeFi in 2024. Today, we're this evening in Davos, and we want to talk about news and what's happening in the industry right now. Can you recall something important that happened in the last couple of months that really affects your business right now?
I think the most important thing which happened to crypto in past half year or probably 1 year, which is like positive signal also, is ETFs approval in United States. I think this kind of shaked the market. We saw volatility returns. We had not such volatility since previous, I don't know, FTX or something. Yeah.
And do you feel like it's, this is exit from this frozen winter in crypto, this step off from SEC, or you're positive on it?
Not only this, but it's many things. So this is legal thing, and we all need legal. In order to grow big, we need to be compliant. So it's absolutely impossible, I don't believe it, that you can be huge and not compliant. So that's first signal that we're getting more compliant. Let's pull their clear rules, their clear adoption. But also there's technical progress. So during 1 or 2 years, a lot of projects were actually building. During the bull market, normally everybody is talking about crypto, but during bear market, people building. That's positive signal. And we see a lot of cool technology. So I think that's another very positive signal.
And so far, it's just been rolled out. I mean, this season of ETF trading. Who are the first traders of these commodities, I would say, right now? This is big ones, big whales, small ones. It's available for everyone. What is the situation?
No, I think it will take some time. Because I have some institutional background. So it will take quite a lot of time before it will penetrate everywhere in financial system. But first, guys are already in, and everybody is optimistic because they know it's going to happen. It will just take a lot of time.
Why do you think that these guys which are already in, they started first? I mean, not anyone else was allowed to trade it right now.
As usual, you need to have a mandate. As being institutional, this mandate should be approved by the board of directors and should be approved by risk committee and so on, so on, so on. So it's very sophisticated. So even when the France was downgraded from AAA to AA+, that was a lot of stuff happening around, a lot of meetings and a lot of approvals. Is it AAA or not? So, and this is very conservative.
But just to add one thing, from that is that this is huge for the US market, because this is the adoption and approval by the SEC for the US market. But the ATP, exchange trading product, and ETF, similar concept, it was long time available in the Europe, like Switzerland, Sweden, Luxembourg. And yes, this is for a bigger market, for a bigger adoption. But those who wanted to be the part, to have this as a part of the portfolio, they had a chance. For a long time, for a while, yeah.
Let me shortly add that it was possible before to buy Bitcoin without ETFs, even on traditional markets. There were some funds which were fully backed by Bitcoin, like MicroStrategy, Grayscale, but this ETF thing is giving kind of green signal to different kind of capital, and it's different kind of compliance.
What it takes to be compliant with this regulation, I mean, to be allowed to trade it like a business which is smaller than the big institutions right now?
Probably question.
Yeah, it's a question for...
You need an approval.
Yeah, so to
approval
from only SEC?
From the regulator, of the country you are sit at.
Okay.
Yeah, so if you are the US, if you're the company that trading, or live in the US, have a substance, people, you need an approval from SEC. If you're in Switzerland, you need an approval from FINMA. And yeah, the same principle applies.
What about Europe, for example? You already stated in Asia it was already been in place for a couple of years.
Yeah, it was possible. If you are a project based out of Sweden, for Zurich, you're able to have the ETF in your portfolio as a local, SIX, for example, product, like a Swiss exchange, product. It was nice. It was not just available in the US. It's the biggest secondary market. That's it.
Yeah, do you feel like it's kind of relief and you can, adapt your strategy for a future that it's already allowed in the United States? It's a precedent. I mean, if someone can do it, others can do it. What is your policy to further this change in regulation in the United States?
I think you said it. So U.S. market is normally very strict, the strictest market. So, and that's a clear signal that it's getting serious. Remember, 5 years ago, everybody should say that it's only for criminals. Bitcoin is created for this, and so on. Now it's priority number one because fund tie-in, ETF is there. So it's very clear signal.
Yeah, and just to add to that, for Andrew and to Anton, is the US, they driving the innovation. That's why important for having this SEC approval for the US, because other countries will look at the same use case, and even if we had the use cases before, it was not such a big strong countries in the market as the US. Yeah.
Yeah, one thing here, I believe that it's not anymore a question. I think anyone would agree that we will see Ethereum ETFs and DeFi coin ETFs also. I mean, it's a matter of time, and this is a level of compliance which, I mean, the hugest difference, I believe, on these ETFs is the source and amount of capital which can now be invested in those assets, because previously the hugest capitals were not able to invest even in those Bitcoin funds like MicroStrategy and others.
Yes, it was
legally not sustainable.
What was your positions in United States market and before this announcement, I would say, and would you try to improve it or to change it? Have you got a lot of clients from United States market? Was it your priority before, or?
No. We are we're restricting. We as OneInch, we have like a set of different products, yeah, and so we are restricting US market accessing those products. So we don't have a user base, and we always, unfortunately, due to the strict regulation and no clarity on the legal side, try to reduce the technical possibility for the user from the US to access OneInch products. So that's why we're not considering this at the moment as a country, but we're building an institutional product called OneInch Pro, with which we are planning, to go to the US fully licensed, and so we're just preparing ourselves, for packing it.
Okay, I understand. So you want
I think
to...
this is relative for most projects. So we're also doing this. So
Yeah.
we completely block US. So unfortunately, and we're looking at a different product which is much more sophisticated, much more expensive for us legally, and so on and so on. So it's very segregated, and I think everybody is doing this.
And you put like it will be in the OneInch ecosystem as well, or just completely a part of it?
Inside the ecosystem,
Inside the
I think
ecosystem.
it's kind of mainstream approach for the most of DeFi products. They block United States users, and they are preparing something to have more legitimate use in this country.
Okay, I understand that you will prepare the fully legal, abiding by all the laws of United States product, and then you go to the market. The question is when, maybe. So have you a timeline in your mind? So how much time it would take, or it's too early to say?
Oh, it's a complex question. Why? Because, also to go to the US, you need an approval from, let's say, FinCEN, like financial regulator in the US, to approve your license, and then you need also they approve your process, and usually it takes time, even if you apply for that tomorrow, it can take, months or years. So we don't have clarity here on that, and we really try to, also try how to see how it cool it down a bit, the things in the US, because it's a bit hot in terms of enforcement, because the principle they use is regulation by enforcement, which is not the best probably way to approach projects, but it's what they do. We don't want to be enforced, fined or whatever.
I got your point.
Yeah, I think that in from legal point of view, it makes sense and it's possible to estimate only processes which happened before. But we are here on new territory. This is something no one explored yet, and that's why any estimation is like pretty low. It's like half year, 1 year, it depends.
But also depend on countries like Switzerland. So it's very proactive. So you can have clear answer yes or no sometimes, a lot of the cases. So, and I think Switzerland benefiting of this, and a lot of innovative stuff happening here.
We were talking about this huge, like not a burden, but a huge cost to implement all this compliance and all this preparation work. Is it the same for comply with European regulation like MiCA or AML or transfer rule or anything else? So can you compare it by the amount of work to perform and the costs engaged? So
yeah, of course. Well, legal discussion, yeah.
Yeah, a legal discussion.
Yeah, It's simpler, definitely. In the EU with MiCAR, yes, they make the rules, but for the centralized business, for centralized exchanges, simple. Yeah, if you're Binance, Coinbase, or Bittrex, if you go, you have rules how to operate the crypto business with your product. If you're DeFi, there is still no rules. But we have, we can feel it. We can feel it, what needs to be done, and it's what we're doing. We're trying to be proactive. There is no rules. We implement still. We create internal controls. We create external controls that do not exist, but we do that. It's forcing that. So Opium, 1 inch, we just, partners, close partners, so we know like a bit, of what we're doing on our side.
So can you say this is something what we feel should be done?
Yes, exactly. It's a good summary of that. We feel what need to be done. Yeah.
So you didn't need these regulations. You just felt like it's normal thing. Yeah.
Yeah, because the financial sector is for a while, quite with us. Like this is a lot of similar processes. Almost the same, identical. We know what to put. To the decentralized, to the DeFi area. Yeah.
In that case, can you compare you with the traditional banking system? How much less of compliance you have right now than
much less.
Much less.
Banks is full regulated and menu. Much less. Yeah, it's like a basic compliance in terms of identifying the illicit activity, identifying, reporting that, and do as much as you can to prevent that. In the banking, there is much more complicated process exists. Yeah, and
And what about your compliance team size? I mean, it's huge one. It's only in-house. You use third-party solutions. How you deal with this space?
Yeah, it's both. So we have like a head of compliance team with him, and toolings. A lot of toolings like DeFi is all about the toolings. So you need also compliance tooling to work it out, and mainly it's like a people and tooling. Yeah.
Circling back to this United States product that you will launch, can you tell us a little bit more about the product features? Would it be different from what you have right now, or just compliance questions? I mean, you mean different legal structure and different legal preparation, but you will roll up the similar product that you already have right now in the market? Or is it something really different that you will offer for United States customers to deal with on the same concurrent market like huge institutions?
I can say that for 1 inch for there will be difference. It will not be the same tech. I mean, part of the tech is the same for sure. It's almost the same product, but it will still have differences in terms of sources of liquidity, because making platform more compliant requires to make liquidity more compliant. And we are planning to have more compliant liquidity, and it's user decision to use compliant only sources or extend existing sources with compliant sources because they have permission to use those new sources. They are not permissionless. Those systems are, if they are compliant, they can be kind of permissionless in this manner. So in terms of technology, it's mostly the same. But in terms of market coverage, it could be different, and it's also a matter of preferences of users. Some of the users could work with only highly clean liquidity, as I would say. This would restrict amount of liquidity. For sure, you will probably have worse
We
rate.
spoke about it in the morning in another panel. It's pretty interesting. I think it can be called jurisdictional arbitrage or something. Suppose we have one jurisdiction which is closed and isolated. So, but for example, I'm a hedge fund and I'm able to work in this jurisdiction and another jurisdiction, so I can do arbitrage myself because I'm allowed for both. So the price is going to be the same, but they're both going to be compliant, and I'm going to be compliant, and that's pretty cool.
And you will rebalance.
I will make money by rebalancing, so probably more people or funds gonna join to do this, but that's going to be likely the structure.
And I do believe that you will have this kind of internal rebalance. Do you have in mind how this technology would work? I mean, you have United States compliance ETF or something asset, and you need to transfer it to another jurisdiction for X or Y, Y reason. I don't know why the client wants, or you need to refill the liquidity pools in different different borders. How it works?
I think those who have access to more restricted pools, for sure they have access to less restricted pools. and they have do all this arbitrage, as Andrew said, and do all this rebalancing. This is actually profit for them. They earn on this, but they do a good thing. They make a unified state of the markets.
Whether it will interfere on international transfers, I mean, can you send the money from Switzerland to United States after you launch a project?
I can say that crypto itself is disrupting international transfers because crypto do not know about countries.
Yes, exactly.
So, if you would ask a 15-year-old guy who used like DeFi crypto wallets and transferred some funds somewhere, if you would show him how this would work in banks, transferring to another country, it's like quest which is not everyone would solve,
Yeah, I understand. It's really practical questions. Another question about the market. The market situation about your product that you will launch in the United States. How you will compete with institutionals on that market that they're already in. So how can you beat it, or how it can be competitive?
I'm not sure that 1inch or Opium are kind of going to compete with any institutionals. It's not about competing. I would say it's about providing access to new world which they don't actually have access to. Even if they have some access, using something else, like for example DEX, not aggregator, is something which would not give you amazing prices, amazing access to all the liquidity. If you want to tap into new world, all the liquidity, you need aggregators, you need all those protocols.
Let's just make an example to make it more interesting, to speak about it. 1inch Fusion, so that's basically the system how to distribute an order flow among many parties, but without order books. So in traditional financial system, there is an order book. So every bank has an order book, so it's not for order books, and they need to speak to each other. But order book is first come, first served, so it's like clear line of orders. So, and that creates very complicated system. What is 1inch Fusion doing is one order which drops starts very expensive to be executed, and then goes really cheap. So, and everything in between. And everybody globally can drop the order to get it as long as they already agree with the price. So price going down, and then somebody already can feel it. So that kind of global, it's better than thousands of order books. So, and it gives equal rights or equal opportunities to everyone to participate, because these order books also have layers of the clients. And if I call to Goldman, it's different than you call to Goldman. And it's so much better, much easier. So we're working in this new world, what Anton said. Basically, it's new technology which going to be utilized by institutions, and they will make it compliant. They will make everything. We just provide this technology, and we work a lot on this technology.
All those protocols, they're non-custodial, and this even those orders and protocol is non-custodial, like execution engine. Yeah, whenever you work with order books, you have an engine, and the engine owns those orders. In this system, you have kind of permissionless order flow.
So that means that you might be partnered up with someone who is already on market to help to build this technology together with a pool of clients. This could be the one other part of the project. So
I would say that for institutionals, this regulation opens doors to have access and interactions. They can interact with those protocols. And that's amazing, because they would get new services which are available on those new world for them. And this is not something where they can jump and compete inside. They will just use all those protocols. They can run own protocols if they want, but that's a very different business.
Yeah.
That's software engineering business mostly.
The last question that we're asking for everyone comes here. We are talking about KYC, know your client, and what do you think about is you are for or against it for the universal application for everything what's happening in DeFi? I would say.
I can say I think it's should be done, and it will be done. So make it better. It will be done. But the way it will be done is also much cooler and much easier, and everybody, including governments, will benefit from it. For example, we were in a chat, in some chat, and the guy was asking the GPT or some other model to create a picture of the girl with a driving license, and the AI already did a very good photo of the girl with real driving license, and it was fake basically already. So another example, when I scan my passport, I send it to some exchange, and then it's already trading 10 minutes later on Indian market somewhere, picture of my passport. Google it, there's a lot of cases like this. So, and that's KYC as we know it now. So it has a lot of disadvantages already. It's a little bit old-fashioned. So what can be done instead, and we have joint venture doing this project. Actually, it's happening. It's like zero knowledge proofs that you have the passport of France, for example. So there is a crypto proof that you cannot get otherwise. So you need to go to France website, you log in, and you have this proof. But this proof, you cannot sell it on the black market. You cannot know anything, but you can prove.
Yeah, because you need like a trustee or another element who stocks it like old-fashioned way as well.
What do you mean?
I mean, you have the government who stocks your passport, so it's going out.
Yeah, so government is issuing your passport, then you need to, so they print your passport, then you need to scan your passport, then you need to send it. Instead of this, government can give you crypto proof, and then you can just log into exchanges everywhere. It's much better.
Yeah.
Technology is the key to improve our life.
Yes.
Yeah, most likely the space is moving from the DeFi to the regulated DeFi, or a reg DeFi, or a DeFi of a new kind.
It should be regulated. It's just not clear how it's regulated right now.
But not the traditional way.
I can add one thing.
Yeah.
I probably not very sure about KYC in DeFi as we know DeFi now. I believe that those who restrict permissionless protocols and liquidity with KYC and other things, they are creating subset of DeFi, and this is not the DeFi market at all. I mean, if any country wants to have like a strict regulation of all citizens and have all those KYC features, they will end up with a subset of DeFi with actual asset of DeFi. I mean, this could probably bootstrap and empower their financial system with all those great technologies, but they will not have access anyway to the latest developments, latest innovations, and existing like high liquidity and other things. That's what I see for now. But probably we will see more of subsets, and this would work. I mean, we see sub-networks now. We have a lot of layer 2s which can be, for example, restricted with KYC. They can be permissioned, not permissionless. We can probably see countries launching own layer 2, like central banks launching own layer 2, censoring anyone they want. I mean, if you are not agree with that, you can just don't use this system.
Yes,
for sure.
Use another.
That's probably what we will see.
The time will show us, so what we'll see. Thank you very much for your answers, and thank you very much for coming today and describing your projects and answering our questions. It was Albus Talks. Thank you for watching us.